This breakout trade trapped every trader out there. It looks like a standard continuation. Price breaks out, mitigates, and continues, but that's not what is happening. This is a higher time frame manipulation. Price first accumulates, manipulates, and then distributes in the opposing direction, because that's what price does. That's how price moves through AMD cycles. So if you keep getting stopped out trying to breakout trade, this is why. Let me show you exactly what you should be looking at. So this is a clean 2-hour trade on AUDCAD. First and foremost, if we just take price action in isolation, this looks like a long. Price is in a downtrend. We then get a shift. Bullish price action develops. We're then looking for mitigation into the fair value gap and continuations. But price just lags and then dumps to the low. Why is that? So let's take this away. The first thing I need to say is that we're trading swing trades. So this is 12-hour execution, but of course price is fractal, so this works just as well on the lower time frames. But looking at price action in isolation means absolutely nothing. You need to pair it with higher time frame candle behavior, because that is going to tell you what price wants to do next. So the first thing I want to do is look at the monthly candle. So now we see the monthly candle range sitting behind 12-hour price action. And what we see is that the previous monthly candle, this range here, closed below the previous candle range. So when we're looking at this bullish price action, we're not expecting price to reverse here because there's no signal on the higher time frame that it should. Price closed below the previous candle. So we're actually looking for shorts. So we need to just sit on our hands at this point. So let's take the monthly candle away and look at what the weekly candle's doing. Well, price breaks out, and where are we breaking out? Above the previous weekly candle range. Price then fails to go higher and closes inside the bullish fair value gap. What this does is gives us weekly manipulation. Price broke out above a previous weekly range. It then closed inside the range. So that means we have now printed a higher time frame target in the market, which is the low of the candle that has been manipulated. Accumulation, manipulation, price now targets the low, because this is where external range liquidity is sitting. If you now bring back the monthly candle, what we're seeing here is the start of the monthly continuation. And where? Lower. So this is target 1 and much lower is target 2. But let's just trade the weekly to start with. So what we see is that price breaks out. Traders looking to go long are starting to load their positions. Their stops go here and here. And that's exactly where price is now going to target. So if we bring back the weekly candle, we can now map our internal range liquidity. So here is the last buy before the sell. So this is the order block. What we then get is price trading into the order block and dumping again. We get a second order block forming, and this coincides with the actual candle closure. So this is where we have confirmation of manipulation. So when price retraces, it's retracing into the bearish order block, the last buy before the sell. So we can take an entry from the formation of the order block and cover the swing point. Yes, we see some consolidation here, but ultimately price does its thing and dumps aggressively to the low. So you can hold this for a 2R, or you can wait to see what happens with the monthly continuation. And if you just held this, you're getting 3, 4R multiples on your swing trade. So that's how to stop getting trapped in breakouts and actually trade the right strategy in the market. Let's look at another example on NZDJPY. So again, in isolation, 12-hour price action means very little. I'm going to overlay the 2-week candle here. So it looks like price is breaking out here. We have bearish price action. Price trades in to the order block and then dumps. We then have a new bearish fair value gap to get involved in. But what is price doing? It is raiding the external range liquidity at this low. And when we see this bullish candle close, what we form is a new bullish 12-hour order block. So what we're actually seeing develop is a sweep of a previous candle's range, which is the 2-week candle. Price is breaking below, closing inside the original bearish leg, creating new bullish structure. So we have everything we now need to take a long position, and we can take this in anticipation of this becoming a 2-week manipulation. Soon as the candle closes, this then exposes the high of the accumulation candle as our higher time frame target. So you can very easily hold this all the way to the high, which is a 3R trade. So instead of looking for shorts and getting dumped or run on, you can wait, see that this is actually manipulation, not a breakout, trade the counter trend move. You've got yourself a 3R swing trade. This is how to become consistently profitable in the market. Once you get good at spotting this, as a swing trader, you can trade in just 15 minutes a day. And the good news is I teach this in detail over 30 videos in a 3-part series for free on my YouTube channel. So go and check it out, and I'll see you on the next one.